Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we're seeing here is a consolidation, a compression of the Bollinger Bands. Bollinger Bandwidth is now below 2. It's at 1.99. So typically what we see is compression for a period of time and then expansion. And I would really like to get into the discussion of band expansion during tonight's free webinar. It's at 4:45 Eastern Time. We'll talk about where the market is, where the market's headed. We'll do a Q&A. This will be the third one. I'm trying to do one a week, and they've been a big success. So if you haven't checked one out, the sign up is it's on this post. It's on my Twitter feed. Come and check it out. We're trying to make them informative, and we've got some really good feedback. So what we should see here is, basically engagement with the middle band just about every day if it's truly going to compress. 98 is a Globex high. We've pushed into the low 84s as far as Globex low is concerned. I think we've got another push down in us in the regular session. The weekly pivot is still down at 2079.10. That's a natural place for the dip buyers to come in and try to defend the market. I fully expect them to arrive every morning pretty much on time as they have been. These kinds of markets are, don't overtrade these. Control your size and control your size, control your risk. We did 7 or 8 trades yesterday. We didn't have any trade that was in excess of a 5 or 6 handle winner, but they were all positive trades. So you just have to control your risk and pick your spots, and just kind of hit some singles and doubles, move everybody around the bases, manufacture some handles until you get that large directional move. Because yesterday opened up whippy and it stayed whippy. One of the big themes for 2015 is that neither side, neither the Bulls nor the Bears, have been able to finish the other one off. You look at 2013, the Bears were finished off by the Bulls very early in the year, and they ran away with it. This year, the Bears have their time, the Bulls have their time. Neither side can finish the other one off. I mean, we had a whole week right here in early July where the Bears were desperately trying to finish the Bulls off, and they couldn't get it done. Back here, we had a whole week where the Bulls desperately were trying to finish the Bears off. They couldn't get it done. And as far as the short term is concerned, here's a 15-minute chart. Here's your high from Monday at 2103.75. This is not a picture of the Bulls taking control of the tape after getting back monthly pivot and mid-band and some of these other big areas late last week. The 2013 Bulls, we'd be at new highs by now. It would be over. The Bears would have blown it down in the 40s area, and it would be over. So, you have to adapt to the overall environment that you're in, which is a very two-sided market. So in two-sided markets, you control your risk, you take your profits, you get a runner on, and you see if you can turn a good one into a really good one. And sometimes, it's just not going to run any farther, and you gotta cut it and move on. So that's my best advice for a two-sided market. We can talk about that this afternoon too. All right, everybody have a fantastic day. Follow me on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. More than a dozen trials, just in the last, 3-4 days, and everybody's learning together. And it's an excellent opportunity to come in and see what we're about. I hope to see everybody at 4:45 this afternoon for the webcast. I'll be back tomorrow morning with another recorded webcast. Until then, trade them well, everybody.